The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Wednesday. We got about 24 minutes to go until the start of trading, and you got markets picking things up in positive territory. It's Fed Day, folks. We have a Fed announcement, 2 p.m. Eastern time. You also get the president speaking right at 2 p.m. Eastern time to throw that on the volatility spike. Fed conference, press conference at 2:30. Following the statement at 2 p.m. Eastern time, all but expected 50 basis points. The conversation will quickly shift to the tone and the press conference from where we go from there. I see a lot of risk to the downside versus the upside, folks. We're sitting at 4,200 right now, and every single economic indicator right now is pointing to inflation soaring, and it's also pointing to a pretty strong economy, which will give the Fed the ammunition it needs to hike and hike continuously to get that inflation under control. We'll see where we land at 2 to 2:30 p.m. Eastern time. I expect a pretty tame market coming up to that point. We'll see where we go. Jumping into the markets, S&Ps right now up about 10 points. You see the action yesterday. Volatility in both directions. We chop around. Since the close yesterday, we drift up a bit. We've tailed off a bit. A little bit of economic numbers this morning we'll get into in a moment. NASDAQ, pretty calm action as well, right? Monday, some extreme volatility. Tuesday, we chop around a bit. And today, we've just kind of trailed right into the middle of the section from where we were trading at on yesterday's action. Dow right now up by 70 points, 33,103. You got the Russell right now, positive by 7. How about crude? We're going to talk to our man Teddy Kegstad at 40 past the hour from forex-trading-unlock.com. We always talk some crude. Crude coming right back up to the highs we saw on Friday. We make it above 107 this morning. We're trading at 106.37 for the price of crude. Gold contract, 1867, quite the pullback from Friday to Tuesday's low at 1849. We catch a little bit of a bid yesterday into the highs of about 11 a.m. Right now, we're negative by $3 on the gold contract. Silver, negative 32 cents at 22.35, and we jump to notes and bonds. You get the 10-year right now. We're only sitting like 8 ticks off of the high yesterday. The low, high yield. Only sitting about 8 ticks off of where we were for the lows early Tuesday. We were also right back near that area at 2 a.m. We actually made it to a low of 118.06. So a tick and a half away from the lows. We put the 10-year on a daily. For some context here, you talk about quite an acceleration, man. You trade from a price point on March 7th of 129.04. You trade down exactly 11 full points to the lows we just made, and we're coming right back down to those lows again. Interesting. That's where we're coming back down. I'm going to take this Fibonacci off there in terms of coming right into the Fed meeting. You could make the argument that this type of pricing action is getting ahead of a Fed that is going to be hiking continuously. It would be a real argument when you got the 10-year trading down 11 full points. You got yields pushing 3% right now as we come into a 50 basis point hike. But boy, I still think there's a lot of risk, folks, in terms of somehow it seems like Chairman Powell has been able to surprise this market a bit when he's spoken since the March meeting. Okay, going back to the S&P here, Kevin Hincks made some great points yesterday talking about, and I'll talk to him coming up right after the first break in about 8 minutes from right now. The last meeting, okay, to go over things was March 15th and 16th. As that meeting began is when you had could be called a relief rally, okay? But we came into that meeting, the Fed hiked by a quarter basis point, so the market probably liked that. Okay, 50 was definitely on the table there, but they did not hike by 50 because of the war. You traded from a price point of 41.29. We actually got about 4,600, March 29th and 30th. We got the meeting minutes of that meeting, April 6th, I believe. So the cascade began there. We also got some harsher comments from the Fed as he was speaking at a number of different occasions throughout the month of April. That sent the market spiraling down to negative territory continuously. We're back right where we almost started the last meeting, which is remarkable when you think about it. Now, here's what I'll say. From where we were in the last meeting, I think the consensus is the Fed probably should have hiked quicker. All right, you're even seeing Jamie Dimon out there saying, yeah, they probably could have went quicker than they did. I'd be very careful with what the Fed is going to bring on this 2 p.m. meeting, folks. Does not mean the market's going to tank, but when I look at the risks on both sides of this market, I see it very difficult for the Fed to say anything that's going to push this market to a relief rally of much higher prices. We got some decent earnings this morning. You got Starbucks trading up positive, Airbnb trading up positive. I believe Uber had some decent earnings. Let's jump around. Uber, no, see, they're even lower, man. They had some decent earnings, but they spent. Uber, look at the volatility, down to 25.83. You were up to 30. They're having their conference call. It doesn't seem to be going well for Uber. Lyft had quite a disaster last night, to say the least. Down from $32 to $22 on Lyft. You jump to Starbucks, and we'll get into all these equities, but just taking a peek. Starbucks isn't even going to be providing forecasting for next year. A lot of that having to do with China. They just can't figure out how to forecast. Even with that, though, strong numbers from Starbucks as they trade higher in Airbnb. They're giving it up back to 149 after being higher to 150, 250. Man, you're going to have some volatility today, folks. So stay with some quick fingers, to say the least. All right, let's jump around to some of the headlines I got pulled up here. We'll start with the Fed. Fed to tighten with a big hike. Asset runoff. Decision day guide. Panel will reveal plans to cut its $8.9 trillion balance sheet. The human mind is almost incapable of understanding what $1 trillion even is. How about $1 billion? How about $1 million, right? $1 trillion, $9 trillion is their balance sheet, folks. I was talking about that. It would take, imagine if you're running $90 billion off a month, you're talking about 8-9 years of straight letting that expire into the market of a roll-off. It's just an absolute obscene amount of money. 50 basis point increase going to be the largest since Alan Greenspan's tenure as chairman. Add in the impact of shrinking the balance sheet, and the scale of the policy shift recalls the 80s measures of his predecessor, Paul Volcker, reflecting central bankers' sense of urgency to bring down inflation at the highest level in 4 decades. And there's the yield, folks, even from where we were in March, right? Look at where we were in March on this 10-year. So you can make the case that the market has gotten ahead of where we are and where we recognize that we're going to be. But look how the 10-year has traded, okay? Excuse me, this is the 2-year. Excuse me, all right? The 2-year, though, still quite a rise. Compare that to what the market did, okay? What was up with that huge relief rally that just gets completely reset? That 4,600 in the S&P, man. Quite a price point. We give it up pretty quickly. And yeah, we'll see where we go. The FOMC will likely be presented with 3 options during the discussion that also included a 75 basis point increase, but the odds of the surprise are low. And I would say so pretty much consensus. Chairman Powell is not in the business of shocking the market. You might make the case that he should, okay, but he is not in the business of shocking the market. Seems all but certain that we're going to come with 50 basis points, but it won't be a shock if he reveals how his thinking has changed versus maybe the March meeting. Are they really late? Are they so late that they might consider jacking things up 75 basis points if things don't tame out in the next 2 to 3 meetings? Very interesting to see what happens here. We find out from now about 5 hours and 15 minutes. No, less than that. 4 hours, 45 minutes from right now. Fed decision. 5 hours, 15 minutes from now, we get the press conference. I imagine you'll see a pretty tame market as we come into that. We'll be coming back. We'll be talking to our man Kevin Hincks from TD Ameritrade Network Fast Market. We'll be right back, folks. Stay tuned.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got markets in positive territory. You're looking at an S&P right now, positive by 9. We got the NASDAQ positive by 20, the Dow positive by 66, Russell positive by 6 right now. I know our producers, they're trying to get Kevin on the line. It's a busy day, folks. They're getting ready for Fast Market at 12 noon Eastern time. Jumping back to the Fed conversation real quick. Number out this morning, private payrolls increased by 247,000 in April, well below the estimate. Estimate was for 390,000, significant decline from March, which saw an upwardly revised gain of 479. The one thing I will say is we've seen some huge discrepancies from the ADP number to the non-farm number on Friday, folks. We all have our personal biases. You can take this data point and possibly say that that is going to be indicative of a non-farm payrolls miss. All I'll say is that in the past few months especially, we've seen some huge discrepancies from the private number to the non-farm payroll number. We'll see where we go on Friday. Jumping back real quick to the article I was looking at, just general talk of the Fed. Here's one I want to go over. No change in guidance, question mark, okay? Most economists are looking for the FOMC to signal an ongoing increases in rates, repeating the March guidance. About 1 in 5, though, it's a pretty substantial number when you think about what may be signaled, think that the Fed could signal half a point or larger hikes coming. If that happens, folks, watch out. We find out in about 5 hours from right now. It's going to be an interesting one. Let's jump over to our man, Kevin Hincks, folks. Every trading day, 12 noon Eastern time, Fast Market on the TD Ameritrade Network, right here on Tiger TV. Your host, Kevin Hincks, Tom White. They walk you through the day's market action. And boy, do we have a day today. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. You know, for traders and people in the financial market, it feels like the OJ verdict day. It's so popular today, Tommy. I mean, this is the day we've been waiting for now, well, a couple of weeks, frankly, since Jerome Powell mentioned 2 Thursdays ago that he was going to raise by 50 basis points. So that part of the conversation is known, but how he guides, how he sees the economy going forward, both in terms of interest rates and in terms of the overall strength of the U.S. economy. Remember, since the last time he spoke, he's got a negative 1.4 GDP. He's got Goldman Sachs coming out and saying core inflation has peaked. So it's going to be interesting how he, puts a frame around, tells the story of how he sees the U.S. economy. It's going to be must-see TV, Tommy.
That's for sure, man. The OJ trial, that brings me back, man. I was in high school those days, and I remember, Kevin,
myself there a little bit.
I remember running down the hallway in high school. Even high school, they could find a TV somewhere in our high school to watch that thing. Too funny, man. But I agree. It's all the talk. Even friends of mine who aren't financial professionals, right, in the market. But, boy, it's the talk today, man. So 50 basis points is the expectation, Kevin. It is interesting that there's so much data out there on both sides of things. We have an ADP jobs number this morning that was a bit of a miss, but we've talked about before when you've come on this program, the discrepancies sometimes between that number and the non-farm number that we get on Friday. Inflation, of course, is raging. Then you have the GDP on a negative number. So many data points that could be conflicting with this economy right now that it's really interesting as we come into the Fed decision at 2 o'clock. We have the press conference at 2:30. We got some decent earnings out today and last night. Airbnb, some strong numbers, Kevin. Yep. They're up about $5. Uber, some decent numbers, but Lyft, some tough numbers for Lyft, man, trading lower. What's your general consensus of the earnings generally as we come in? I mean, the big dogs were last week, but we're seeing the companies cycle through. What's your general take as we come through this week of the earnings happening? Yeah,
earnings other than Uber and Lyft have been generally good. Now, Uber wrote off their Didi investment, similar to what Amazon did with Rivian, right? And that caused some of their numbers to look different. That stock is down, but Lyft seems to be having some big problems. And the fact that Uber felt the need to release their earnings early was significant of the weight that the Lyft earnings was putting on both of those stocks. I mean, Lyft, looking throughout the day, down about 25, 27%. That is a big number. And these companies, like we've been reporting for years, have trouble being profitable. And now with the new problems, they said they're going to have to spend more money to get employees. Uber came out and said, we don't see that as a problem. So, these companies just keep going through the struggles of finding a way to be profitable. Tommy?
It's so cool because we can all make the case, man, that travel's back, right? Airbnb, they had some huge numbers last night, but there are so many other facts going on in this market, and you talk about them, man, whether it's hiring human capital, right? Whether it's just cost of goods sold for any company out there doing business. It's not just enough right now to realize where consumers are spending money because the costs that are going up across the board and the human capital aspect of things. The jolts yesterday, huge number. What was it? 4.5 million people quitting their job in March, man. That is going to weigh on the inflation, in my opinion, as you have so many people out of the labor market, man. It's a tough one when you're hiring. May cause some inflationary tendencies as they come in. And just human capital. It's a tough one right now, as we all know. So with that in mind, Kevin, we might have some idea what you guys will be talking about on the program with Fed Day. Beyond that, what are you guys going to be talking about at Fast Market coming up at 12 today?
Yeah, we're going to talk about the Fed, but still trade some earnings today, Tommy. We'll look at Shopify, everything that they have going on in the first segment, and then we're going to look at eBay and Wayfair today. So nice. Really good online day, online e-commerce day on Fast Market today. So Shopify, eBay, and Wayfair.
Shopify, man. I got it up on the Thinkorswim platform. You talk about a pullback, folks, from 1762 to 465. We use Shopify, Kevin, for our TFNN website. Absolutely great platform. Obviously, the market got a little bit ahead of itself with the multiples. Wayfair, man, talk about a acceleration and pullback. Just remarkable, the accelerations and the pullbacks we've had during the pandemic. I don't think many of us thought, Kevin, many of these equities stood a chance of going back to pre-pandemic levels. The likes of, Roku comes to mind, Zoom comes to mind as well, ARK, of course, all in the press. But it could be a buying opportunity, depending on what you're thinking, man, on some of these equities. Well, Kevin, we appreciate you taking the time out of a busy day today, man, to jump on the program. And we'll be watching at 12 noon Eastern time for all the fireworks today ahead of that 2 p.m. announcement. Thanks so much, Kevin. Have a great one, man.
Always a pleasure, Tommy. Buckle up today. Have fun.
That's right, man. Buckle up. Stay safe. Keep those fingers quick. We'll be watching, Kevin. You have a great one, too. Folks, tune in every trading day. Today, I'm sure it'll be a good one, man. They'll be talking some equities. And Shopify, let's take a look at this, man. It's always tough when you're trading companies that are based on multiples, folks, in the future, that, to use Kevin Hincks' term, video game style numbers of 1762. It is a tough one to figure out where these stocks stop, folks. I mean, I've been looking at Zoom. I've been looking at Roku. You can make similar cases that are they really going to accelerate far below their pre-pandemic levels? It's possible, folks. Okay, we are in an exceptional trading environment right now with many variables that many companies are not used to dealing with. Okay, and my opinion is that they will persist for some period of time, and that the risks are much more prevalent, even if it's tail risk. Okay, but it's a risk, folks. And like today, when the chairman speaks, do I see a risk that's going to send the market up to 4,500 or a risk that's going to send the market down to 3,900? In my opinion, there's a lot more out there that might send things down. We'll finish this up when we get back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. You're looking at an S&P opening up by 7 points in the green. NASDAQ 100 at 24 points in the green, and the Dow positive by 48. All the markets pretty tame as we come into Fed Day. Let's jump over to some of the other points I was talking about here. Now, Jamie Dimon out saying the Federal Reserve should have raised rates sooner. It's such a common consensus, folks. I'd say, of course, at this point, hindsight 2020, who is saying that the Fed should not have raised sooner? Okay? Hindsight's always 2020. You can make that case very easy now. Not really a headline that you're making that case, okay? But you're also talking about the potential for recession. Now, the economy is very strong, he said, although there was 1/3 chance of the Fed's actions leading to a soft landing and a 1/3 chance of a mild recession. Where's the other third? Not sure. But We get that at 2 p.m. Now, what I wanted to talk about was, this was an article out yesterday, I believe, last night potentially. Randy Quarles. Yes, Randall Quarles. Yes, so this article is yesterday at 1 in the afternoon. So the one point I wanted to bring up that he makes that I think is a great point here, okay? Ooh, I may sneeze, excuse me. He talks about employment, okay? Employment costs. I've referenced it to Kevin Hincks talking about JOLTS. 4.5 million people quit their job in March. Record territory in that area. Here we go. So he was the vice chairman. He's now the chair of the Fed. He's now the chairman of an asset manager. So whatever bias that comes with. But for an economy that has accustomed itself to interest rates as low as they have been for as long as they've been, it doesn't take a very large nominal increase in interest rates to be a very significant percentage of debt service for a number of heavily indebted actors. The effect on the economy could be fairly strong. When you go from 0% to 3%, it's a harsh difference than if you go from 6 to 9% or 6 to 8% or something like that. He's saying they should have raised in September, okay? But when you see the impact in terms of where this may be, you're going to have many inputs in this market that are going to persist with inflationary tendencies. You already have a GDP number that has snuck into the negative. Now, you could make the case that there's strong domestic demand. That had to do with, well, there's imports, et cetera. Okay, there was a lot going on in that GDP number, I realize. But the Fed is aware that they are late to the party, and that is why I see much more of a risk to the Fed signaling that they realize they are late to the party, and they now realize, what if they talk about realizing that the economy may not be as strong as they think, with a GDP number already printing negative, okay, banks already calling for recessions. What happens if inflation is still raging as we come into a recession? It's a very real chance, folks, okay? The Fed is going to have to accelerate to get inflation under control, and meanwhile, we have a recession tendencies coming into the market. Stocks will not like that, okay? So there is a risk, in my opinion. I've been harping on it, but folks, the market's not going to climb back to new all-time highs as the Fed starts hiking 50 basis points and people are pointing towards a recession next year. We're still sitting at pretty lofty levels of 41.69 in this market when you got an all-time high of 4,800. And really, we chopped around there for what, 8-9 weeks, right? Realistically, you could say that there was a top formation that began to form at around 45 to 4,600 in this market. You make it to 4,800 right as we kick off the year. Everybody waits till January 1st and sells for tax reasons, maybe. But you look at this market, folks, okay? Let me just take this Fibonacci number off for clarity. That's not what a recessionary pullback looks like, especially in the inflationary environment we're in right now. So it's going to be a dicey one. We'll figure it out at 2 p.m. We'll find out. All right, let's jump around to some of the other news stories. As Kevin said, so where's my Uber article? Here we go. Yeah, Uber sidesteps Lyft's debacle. I do have to sneeze a little bit, but hopefully I feel like I'm going to sneeze. Just may come. Okay, we'll try and avoid it. Uber sidesteps Lyft's debacle with optimism over riders' profit. We do have Uber in my newsletter, folks, Rocket Equities and Options. We are down 10% on their numbers, man. Quite a pullback. You're talking about below anything we chopped around in 2020. This one is surprising, all right? Now, they're paying the price for Lyft as well. That's the Lyft acceleration lower. You pop higher. They release the official numbers. I don't know what's going on in the conference call. I'll check it out after the program, but probably not the best scenario considering you're down about 10%. What's interesting in terms of why is it trading down, gross bookings is a good number in there, and free cash flow. Where are we here? They're going to get free cash flow in 2022, I think. I had it pulled up here. Maybe, I think it was in the CNBC article that I had it pulled up. Okay, Uber said it expects to generate meaningful positive cash flows for full year 2022. That's going to mark the first for the company that it would do that. and said in a statement in April, mobility gross bookings exceeded 2019 levels across all regions and use cases. And what Kevin was talking about, net loss of almost $6 billion for the first quarter. That was attributable to investments in the Southeast Asian mobility and delivery company Grab, autonomous vehicle company Aurora, and Chinese ride-hailing company giant Didi. All of them failing pretty spectacularly. CFO said in prepared remarks the company has the liquidity to maintain its positions and wait for a better time to sell. So they are still holding those positions. The revenue, $6.9 billion. Interesting that mobility segment actually climbing above the deliveries. So they were very reliant on the delivery business during COVID. Mobility now at $2.52 billion compared to delivery $2.51. You think about the missed opportunity in general on Lyft. Now, Lyft has some big problems going on in general, okay? Well, you think about the miss they had. Uber Eats, right? Uber Eats is now almost half of the business in terms of what they're doing for revenue. Revenue strips out additional taxes, tolls, fees, and from the gross bookings. 1.71 billion trips on the platform in the quarter, but nonetheless, okay, the market punishing Uber this morning. All right, let's jump around to some of the other headlines we have out here. Let's see. Yum Brands. Miss estimates as China weighs on KFC and Pizza Hut. We pull up Yum to see how they're trading. Basically flat right now for Yum. We check out CVS. Raises the forecast for the year as first quarter earnings top expectations. Declining demand for pandemic-related services, though, outpaced Wall Street's expectations for earnings, raised its guidance for the year as it saw demand for prescriptions and more, while demand for COVID vaccines and testing declined. Thankfully, that's how it's supposed to go. The company focused on other ways to draw foot traffic, drum up business, and stem competition from online retailers. Jump to CVS shares. They're basically flat as well. Pretty interesting, this market bid sits literally flat as we wait for Fed Day. Gold contract right now trading at $1,865. Let's jump around to some of the FANG stocks. We got Amazon down 1.1% right now to kick things off. You got Apple positive by 0.4% right now. Google shares negative by about 0.4%. We jump over to Tesla shares right now. Back above 900, held above 900 yesterday. We're up 0.3% at 912 right now for Tesla. And you got the S&P up 2 points. And as we come into Fed Day, you jump over to the VIX. You talk about a VIX, man. 29 on the VIX, back from 36 on Monday. All right, folks, stay tuned. We'll be coming back. We'll be talking to our man Teddy Kegstad. We'll be talking some Forex. We'll be talking some crude oil as well. Stay tuned. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the markets pretty tame as we wait for a Fed announcement at 2 p.m. Eastern Time, press conference at 2:30 p.m. Eastern Time to follow. Let's jump over to our man, Teddy Kegstad. We talk to Teddy, folks, every Wednesday at 40 past the hour. You can reach him every trading day at his website, forex-trading-unlock.com. Teddy Kegstad, I love that we get to talk to you on Wednesday, Fed Day. Good morning, man.
Good morning, Tommy.
So, where do you want to kick things off, Teddy?
Well, there's a lot to talk about today.
It's so open-ended, man, but I was jumping around. I saw the yen doing some action there. We got Fed Day. Let's kick it off with the Fed. As a Forex trader, what's your approach on Fed Day as we come into a pretty volatile statement potentially?
I think it's going to keep most of the markets quiet and the currencies for the most part. I think you got the dollar index, which is hovering below its highs right now. Right now, I think you're going to probably see the dollar under a little bit of pressure going into the lunchtime trade, not much. And you got to remember that right now the dollar is on its highs, so any type of downtick in the dollar is not bearish, it's profit taking, and it's just it's normal right now, especially in this environment on a day like today. So I think that you're going to see more traders are pondering, the Monday morning quarterback, Jamie Dimon, and his comment today. It's kind of funny how he was pro-Fed, pro-interest rates being low, and all of a sudden he's like, they should have raised rates a long time ago. He wasn't saying a year ago that they should be raising rates,
sure.
So, but I think that's what you're going to see today is the people are just pondering a lot of jibber-jabber until the Fed releases their comment. I agree with a lot of the talk about them talking about more than just a half a point over the next couple meetings, and if half point pops, we've been talking about that already for 6 months, that they should be doing that, So I think that that's mostly what you're going to hear about. They're going to still start to acknowledge the fact that inflation does exist. They can't deny that anymore, and I think that they're going to have to probably change their speak also, being that they're going to have to agree with the fact that the consensus that inflation is here to stay. It's not going away anytime soon. The reality is, I think you're going to see this, the actions of the Fed right now, they're chasing this curve. Sure. But we have a contracting economy, and I've been saying, for months. I said at the beginning of the last year in the fall that this should be the year of the economic numbers. Now they're all lagging, so that means that where we are is a lot worse than what we're seeing on these sheet, just on a balance sheet basis, So, and I think that the markets, no matter what, they're forward thinking, and the traders are very aware of this environment. Anyone that doesn't acknowledge the fact that inflation, if you think that we saw inflation this year, wait till where we are in a year from now, just think about your grocery store, okay? Or even in gas. Right now, you're spending 3 times what you were paying for gas 14 months ago. That's not changing. I would guarantee you that this time next year, you're paying at least $1.50 to $2 more for gas on average, no matter what. No matter what we do. And then think about your cost of food. Your cost of food, just think about walking down the aisle. Minor things that are actually pretty reasonable priced and you don't really think about their numbers. Look at pasta. Pasta's up 50 to 100% in the past 6 months. Where do you think that's going to be in a year from now? Pasta is a high margin item for a lot of restaurants, you know.
Sure.
This is going to impact the economy. Think about it. Where do like your big chain restaurants make all their money on? Alcohol sales and things like pizza, pasta dishes, because their margins are super high. Now all of a sudden you take out the one last component in these industries where your margins are high and you shrink them radically very quickly. How fast is the economy going to contract then? You know, and I think that this is going to cause a lot of market swings. It's going to definitely impact the stock market huge, you know, and with the Fed being on a raising interest rate policy, you know, the dollar is going to remain strong for at least in the short run too because of this. So a strong dollar may look good on the chart, but when you think about what it's really, where the value is, the value of the purchasing power of the dollar is crashing. You know,
Sure.
So, and here's an interesting take. I was out this weekend. I was with a friend who had company in town from Europe. One was from the UK, one was from the EU. And I asked them, both of them are businessmen too. And I said, so is the Bank of England and the EU, are you going to start to defend your currency and start at least talking about doing so like Japan? And the first thing the guy from the UK said is like, we don't have enough bullets to defend our currency.
Yeah.
And the guy from the EU said the same thing. And he's like, also their environment, as far as what they really have been trying to push and what they're trying to push moving forward, is in contrary to what you would be doing. You know, so if that's truly the case, then you're going to see the dollar index continue. Right now, any break in the dollar index is going to be a break to buy. You know, so, and I would say it's a profit-taking move. Like today, the euro's up, the pound's up, the Australian dollar. We have a buy signal from yesterday in the Australian dollar. Here's the problem is every single buy signal, and that's why I say don't try and pick a bottom. Right now, it's a corrective move, no matter what, if you look at the trend. But it can't even hold a correction. A correction now only lasts for a day. Instead of being a 3, 4, 5 day trend, even if it's not that extreme in direction as far as how much price movement you get, at least you would maintain that momentum. You cannot maintain momentum against the dollar right now for more than 2 days. And that's something that is I think all Forex traders need to take into account, is that, like we've been talking about, the trends right now are very extreme, and you can ride these trends and just be aware of that. You know, I mean,
Sure.
The trend is your friend is an old adage, but the geopolitical activity of what's going on right now supports it in such a big way that, I mean, your technicals are out the window. I mean, if you're using any type of indicators, overbought, oversold, we know that they're all lagging. Well, they're getting crushed. They're going to continue to get crushed for the next couple of years, you know. So, and I think like oil too, after today, we got the oil numbers coming out, Fed meeting. I wouldn't doubt that we see an upside breakout. And if we do, once we get above 110, 116 is a heartbeat away, and then we're back up challenging 130. You know, I mean, I told you before, like 150 oil by the end of the summer, I think may come a lot quicker. And $200 oil it's on the table. It's not going away.
Those are some statements, man. I was going to ask you, if you're looking for gas prices up $1 or $2, where does that put crude in that realm? If you're looking
there at 150, right there. So now if we're looking at $200 oil, then you're looking at, you know, we'll be paying $8 a gallon for gas.
Well, I hope that's not the case. We'll see what happens, man. But it's a dicey scenario for sure.
Right.
And you got the den. You got the den all riled up, man. You got my dad riled up in there with pasta prices. It's Prince Spaghetti Day Wednesday, and
I know. I'm a pasta fan. I don't like this any more than you do. I'm telling you. But if you can, the average person who doesn't even know markets can see this happening.
Oh, for sure,
you know?
man. For sure.
And if you see this happen, think about this. How much is it going to cost to plant this year? How much is wheat going to cost? You know, the fundamental parts of things like that you know you don't normally think about, you know, because there is such a huge supply. We know the supply is going to be shrinking no matter what, and the cost of that supply is going up because of artificial, you know.
Sure. No, I've been talking about in the beginning of the program. I see a lot of risks in terms of, you know, the Fed. I think everybody knows Jamie Dimon, that we were late to the party. I think that's probably pretty much consensus if you're paying attention. So, yeah, pretty dicey scenario when. Well, where do the risks lie? The risks lie, man, that the Fed might figure out they have to hike, and they have to hike pretty quickly. And like you say, there's a lot of economic indicators that make things maybe a little bit tough as we go forward, as they keep hiking. And we're all facing some pretty tough situations, man, with whether it's gas, inflation, the likes. Well, Teddy, I wish we could do all hour, man. Thank you so much for the update, and we will talk to you next Wednesday.
Rally, though. New highs on the yen before we talk next week.
New highs on the yen. I love it. We'll take a look. Thanks so much, Teddy. Have a great week, man. We'll talk to you next Wednesday.
You too.
We'll be right back, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P up 6 points right now. You got the NASDAQ barely in the red, the Dow up 104, the Russell barely in the red by 1 point as well. We jump around to the VIX, volatility index sitting just under 29 right now. We jump to commodities. Crude, 106.30. Quite the conversation with Teddy, as usual, man. We'll see where that crude market goes. But you're talking about $8 to $10 trading range in just the span of a couple days, folks. So it is well within possible that this thing trades higher or lower, okay? If you didn't think it had a chance of going to 150, people would be selling the heck out of it, knowing it would be going down from 110, but that's not what's happening, okay? Quite the scenario going on in Europe, talking about crude, Russian exports, natural gas, etc. Very interesting day in the markets, to say the least. Some of the other headlines that I had pulled up here before we escape away. Come on. There was Jamie Dimon. And I wanted to talk real quick. What else do we have up here? Yeah, private payroll. So that was the number, 247,000 in April, well below the estimate of 390. Non-farm payrolls on Friday, but don't be deceived from that number, folks, because they can vary wildly in terms of the discrepancies from the ADP versus the number that you're talking about for non-farm payrolls that comes in on Friday. Yeah. And speaking of energy, Texas, man, They're going to be dealing with some energy problems yet again on the power grid, warning that demand will jump over the weekend as customers turn to air conditioners to get relief from the soaring heat. That's going to be a problem, as it's been many times in the past, but we'll see how that plays out. S&P's right now positive by 3, folks. And let's jump around to Uber and Lyft, see how some of those stocks are trading. Uber down 8.2% right now to $27. You have Lyft shares trading at 32%. They're in trouble, folks, in a big way. Whew. Starbucks, as I mentioned, with their numbers, I'd be careful of Starbucks as well, man. Starbucks just pulled their guidance, okay? And they got some real issues going on with China. Starbucks, great company in the long run. But boy, it kind of surprised me that they pulled their guidance. I understand why, because they have such a heavy presence in China. But that's a scary one to be up 7%, pulling the guidance. They had decent numbers, but be careful in that one. Yeah, spaghetti, Prince Spaghetti Day. Can't go wrong with some good spaghetti. All right, folks, thanks so much for starting your trading day with me. We got our man Basil Chapman. He's coming up next. We have Larry live at 11, folks. And don't forget, on the front page of TFNN, Larry's got a live trading webinar coming up 2 weeks from yesterday. You can sign up. When you sign up, you get a free month of Fibonacci 24/7. That starts right when you sign up. So sign up right now. Check it out. I lose you? Maybe I did. Oh, there we go. We're back. Check out Larry, folks. Stay tuned. It's going to be an interesting one. Live programming all day. It's Fed Day. Have a great Wednesday, everybody.